Hi, welcome. Now, in today's lesson, we'll be tackling taxation. So, we'll have three lessons. Lesson number one, it's about taxation terminology. You need to know the terms, you need to understand what they mean. Lesson number two, breaking down of taxation statements. They usually come in paragraphs. If you can break them down, summarize them, you will be able to solve them with ease. You will see. Lesson number three, that's the most important lesson. We'll be having extracts from past question papers. I'll be trying to solve questions that have to do with taxation. That one, it's a must. It's a must watch. So yes, let's get started. So as you can see on your screen, I know we don't have a calculator for today. It's about terminologies. Unless your calculator can solve or can give definitions, therefore, you can get it started, and you know what we do before we start with the calculator, right? So just do that. Just that. Now, whether you're doing economics or not, by now you should understand that we have something called taxation. Now, there is a department that is responsible for the collection of taxes, and that is the South African Revenue Services. Now, this is a 2 mark question that usually comes out. Don't mess it up. It's not South African Reserve Bank. No, it's the South African Revenue Services. Just collect that 2 mark. And by now you know that taxation is government's revenue. Some might say that it's the revenue that they use to finance their projects. Well, one could argue that it is the revenue that they use to finance their corruption. No, no, not the latter. Don't say that. So, have something that we call gross income. Now, gross income is total income or earnings. It's income or earnings before deductions. So, any income that you have before deductions, we call it gross income. I should also stipulate the fact that we also have something that is called net income. Now, net income is still income or earnings. It's still income or earnings after deductions. Deductions. So when you have taken out deductions, what you are left with is net income. But before deductions are taken out, what you have, we call it gross income. So that must make sense to you. Now we have this important thing here called non-taxable income. Non-taxable income. This is the income, or this is the part of your income that the government is not supposed to tax. Government is not supposed to stick fingers into this part of your income. And what is that? Well, something that would like to call pudding. Pudding. Why pudding? Yes, pudding because you don't have the ding at the end, but you do have the pud here at the beginning. P for pension fund, U for UIF, D for donations. So pudding. Remember that pudding, non-taxable income. Pudding is for non-taxable income. Now, usually the pension fund is levied at 7.5%. UIF at 1%. Donations, depending on how much you want to donate. But usually donations, they have a maximum, which can be 100,000 in a year. But now I don't want you to focus on their maximum. You will see how you are supposed to go about that when we get to questions. UIF can also have a maximum. But for now, just know that we have non-taxable income, and that is pension fund, UIF, and also donations. Pension fund at 7.5%, UIF at 1%. These are, or this is part of your income that the government is not supposed to tax, and you'll understand how that works. Now we have something called taxable income. Look at this. We have non-taxable income, and here we have taxable income. This, the government is not supposed to tax. Now, this is what the government is looking for. This is what the government is supposed to tax. But how do we know what the government is supposed to tax? Well, we simply take our gross income. Remember, the income before deductions, and then we deduct or we subtract. We deduct or we subtract our non-taxable income, meaning that here it's where we are supposed to subtract Our pension fund, if it is given, it's where we are supposed to subtract our UIF if it is given, and also where we are supposed to subtract our donations if also they are given. And then when you take your gross income, you subtract your pension fund, UIF, or donations, however they would have been given to you, you are remaining with what is called a taxable income. This is the income that you can therefore use on your tax table. Why? Because this is the income that the government is interested in. Now, you also have something called rebates. Now, I'd like to call rebates and medical tax credit, I'd like to call these discounts, and you'll understand why I say these are discounts. The reason why I say rebates and medical tax credits are discount, it's because they reduce the amount of tax that you are supposed to pay to South African Revenue Services. Now, you'll see how that works. Rebates, we call them tax relief. Tax relief, see? Also tax relief. That is to give you relief. So that is basically a discount. Rebates are tax relief according to a taxpayer's age. Now, this is what is important here. This is not just any tax relief. It is a tax relief that has to do with how old that particular individual is. So, we have three for these. Now, I'll put them, let me make a big arrow. I want to put them this side. Now, let me use a different color for this one. Let's say I'm going to use a red. So now we have something called primary rebates. We also have something called secondary rebates, also have something called tertiary rebates. And how they work is important. So usually you will be given the ages. Maybe it might be something like 16, let's just say 65 and below. Or let's just say that 64 and below. And then here we are going to have 65 and above, and then here we are going to have 75 and above. Now, this is not for you to start memorizing. No, you will be given this. In this lesson, you will see I am going to take out an extract of a taxation table that has everything such as this here. But what I want you to understand is this. If someone or that particular individual, let's say that they are 67 years old, the rebates that they qualify for is obviously the secondary rebate. Let me use a white. They qualify for a secondary rebate. Why? Because they are 65 and above. Now, you do not only use a secondary rebate in your calculation, you use a secondary rebate and also a primary rebate. Why say? Thank you for asking. Because you cannot, unless you are coming from a banana republic. I very much understand that South Africa is a banana republic. You cannot go to secondary school having not first attended primary school. It just does not make logical sense. Before you go to secondary school, you must have first attended what? Primary school. That's how the logic works. If someone is 78 years old, obviously you understand that they fall under the tertiary rebate. That does not mean you're only going to account for tertiary rebate discount. No, you're going to account for tertiary, secondary, and also primary. Why are you doing that? Again, thank you for asking. Because you cannot find yourself at a tertiary institution having not gone to the secondary institution and having not gone to the primary institution. So that's how it works. Basically, what I'm trying to tell you is if someone qualifies for a tertiary rebate, they also qualify for secondary and primary. If someone falls under the secondary rebate, they also qualify for primary. But if someone qualifies only for primary, then it is primary only. So that's how those ones work. And I will also show you. Now, the medical tax credits, we say that This is tax relief received by the main member. So the particular individual who is contributing to the medical, that is the person who gets this tax relief or who gets this discount. Usually they come in a monthly. You will see when we go to the taxation table. Usually they are accounted for monthly. So what you would do is that you would have to understand the fact that if you have to account for a medical tax credit, don't forget that they are in a monthly. Therefore, you have to make sure that if they ask you to account for them in terms of how much that person is supposed to pay for tax, always multiply them by 12 so that you can make them an annual medical tax credit instead of the monthly tax credit, which is always given to you. But you'll also see how that works. And now here we have someone called tax threshold. Tax threshold is, and this is important, this is an important definition, because if you do not understand this definition, you're going to have problems. Tax threshold is the maximum amount a person can earn before they start paying tax. I'll repeat. Tax threshold is the maximum amount a person can earn before they start paying tax. I'll make this example for you. Right here, I'll make this example for you. If a person, usually it goes with age as well, and you will see that. If a person earns 10 rand, or if a tax threshold table says that for people who are 65, maybe 65 and below, or whatever the age is going to be, and that tax threshold is 10,000. What it is saying is this: for people who are 65 and below, and they are earning 10,000, they are not supposed to pay tax. Why? Because tax threshold is the maximum amount a person can earn before. So this is the maximum you can earn before you can start paying tax. If you are 10,000, you don't pay tax. And now let me do this. This is what appears under your tax threshold. Do not pay tax. Okay? Then how or when do I start paying tax? You start paying tax when you start earning 10,001. Why? Because now 10,001 is above the maximum. It's above the maximum. Remember, the maximum is 10,000. So if you start earning 10,001, now you are above. Now you qualify to pay tax. Now you start paying tax. How about someone who earns below? How about someone who earns 9,999? Well, they also do not pay tax. So you see how it works. If this is what has been given to you, 65 years old and below, and the amount on the tax threshold is 10,000, what it simply means is that people who are 65 years and below who earn 10,000, they don't pay tax. But people who earn more than that 10,000, they pay tax. People who earn less, so people who earn exactly the tax threshold amount and below, they do not pay tax. Let's go so that you can understand all these terminologies that I was talking about. So you see here, we have this guy right here. This is the annual income tax deduction for individuals. This is how it works. Remember this. Is this a green? Yes, a green will be visible. You remember this. Taxable income. Remember that we have a formula for it. I said that when you want to calculate taxable income, it's where you have to subtract gross. You have to take your gross income and you subtract your what? Your non-taxable income, which is what? Which is your pudding. Pension fund, what? UIF, and also what? And donations. However, they are given to you. And then you will get this. And when you get this, that's where you can start working through these steps, of which I will be showing you in the next lesson. Now you have, remember our guys, discount, can write here discount. And you also have this. discount again. Medical tax credit discount, tax rebate discount. This is what I was talking about. You see, a primary person is a person who is 64 years old and below. So if you are 64 years old and below, in 2024, you qualified for 17,235. But let's say that you were, and let's make this example because now this is where we are supposed to make this example. Let me use a white. So now you find that that particular individual in 2024, they were 67 years old. 67 years old. Now, the first question you should ask yourself, where do they fall? Under which rebate do they fall? Well, simply because they are 67 years old, they fall under the secondary rebate because it says 65 and older. So they fall under secondary rebate. Now, what did I say about people who are in secondary school? I told you that they cannot find themselves in secondary school except they also have gone to a primary school. So how are we supposed to calculate this? We are supposed to say that a person who is 67 years old, as much as they qualify for the 9,444 because that's where they are, it is secondary, they also qualify 17,235, which is what? Which is also in the primary. Now, how about someone who is, we are also going to make this example, how about someone who is 79 years old? Now, what's the first question? The first question is where do they fall in these tax rebates? Well, they fall here under the tertiary. So that means that the first one that we have to account for is the tertiary one, and the tertiary one is 3,145. But is that all? No, that's not all. Why? Because it doesn't make sense that they ended up in tertiary without having gone to secondary and primary. So that means we also have to add secondary here, and we also have to add primary here. Why is this? How is this effective? This simply shows you that the more or the older you are, the more tax discounts in terms of tax rebates you are going to receive. So when you grow older, the more you are receiving more rebates. So hence it works like this. Now let's go to this one here for the taxpayer, the medical tax credit, because it's another one. Remember I told you this, you see, and it's here. It's per month. It's per month. If you make a mistake and you do not see that it's per month, you end up subtracting annual with monthly, then your answer becomes wrong. So always pay attention to this. So if they tell you that there is an individual who contributes to medical aid, and that individual, they contribute, so let's say that it's himself is the contributor, is the person who is going to receive these medical tax credit, plus the wife, so it's himself, the wife, and two kids, right? Two kids or two children, and we are dealing with 2024. So how do you account for this? So now, first of all, himself is the taxpayer. That is number one. Himself is the taxpayer. So for himself, the taxpayer, we are going to account for 728. And then who else? Oh, there's a wife. The wife is for the first dependent. So that is number two. That is our first dependent. It's also 728. But we also have two kids. Yes, we do have two kids. For each additional dependent. So we are going to say 3 here and 4 here. Why? Because they said for each additional dependent, it's 2, 4, 6 plus 2, 4, 6. Now you are going to get the total for this one. If you have to subtract it back in the tax or the amount of tax that they're supposed to pay, it has to be annual. You have to multiply it by 12. But like I said, on the next lesson, you'll understand what I'm talking about even more. Now let's also show you what I was saying with regards to tax threshold. Remember, it is the maximum amount that a person can earn before they start paying tax. A person who is 65 years and older, do you see that the tax threshold for 2024 is saying that it's 148,217? What does this mean? It means that for a person who is 65 years and older, if they are earning, I will repeat this again. In fact, let's say 65 years and older. Let's just make it. Let's say that this individual person is 67 years old. 67 years old because they still fall within that category. If they are earning 148,217, that means that they do not pay tax. Okay, then who is supposed to pay tax? It's someone who earns above the maximum. That could be 148,218. Now you start to pay tax. How about someone who earns below? If you earn the same or you earn below, you still do not pay tax. Very important. And I will show you when we continue with lesson 3 why I am saying that you earn the same as the threshold or you earn below the threshold, you do not pay tax. But if you start earning above, that's when you start to pay tax. Thank you. So stay tuned for the next one so that we can break down taxation statements. Keep well.